Andy Jassy saying on the call last night that Amazon will continue, quote, aggressively pursuing AI investments. Joining me now is Toney of Plexo Capital. He's a CNBC contributor. It's good to see you. Welcome back.
Thanks for having me.
When you make of those comments, he also called it maybe once in a lifetime type of opportunity, clearly setting the stage that they're not going to stop spending a lot of money. Their CapEx was up 81% year on year. Remarkable.
Yeah, it is remarkable. But I think when we take a look at the Magnificent Seven that have reported in total, we can see that the AI ability to drive revenue is here. And a key player is obviously Amazon. So yes, those investments are paying off. In fact, another comment that the CEO made is that their AI suite of products is actually growing 3 times faster than AWS at this similar state. Now think about that comment and think about how significant AWS has been for Amazon. So to make that comment, I think that portends what the future holds for Amazon with AI.
Do you think that Amazon was the best of the group this week? How would you put a report card out?
That's a great question. When I think about some of the other folks, I mean, obviously, Microsoft had great results. Alphabet had great results when you really narrow in and focus on both cloud. But I think and Apple, I think one comment that I would add to your prior guest is the Apple's ability to really increase that services revenue, which is going to become more important to give them a little bit of a cushion around the dependence on hardware. But yes, I would say that Amazon's results were quite impressive. And I would say just particularly the way that Amazon is positioning itself, leveraging the ability to have that customer base from AWS to not only provide their own suite of products from Amazon around AI, but also, they also can offer competitor solutions as well through Bedrock.
I want to ask you a broader question, Lo, about the environment out in Silicon Valley, if I may. And
Sure.
It's because something caught my eye earlier this week. And it was a comment that the LinkedIn co-founder Reid Hoffman made about the climate in the Valley because of the political discourse and the different sides that some large names there have taken in this election, to which he described a rift, one that might be long-lasting, one that might have interfered with business in the Valley. The idea that some LPs or investors have chosen sides in the way they're investing now and might in the future. And I'm just wondering what you make of that, if there's the possibility that that could reduce the pools of capital to some venture-backed companies based on which venture firm that they have been backed by. How do you take that issue in total about what you're seeing and who you're talking to out there about that issue?
Yeah, thanks for asking that question. One of the things that I have noticed within the past couple of years is the increasing importance of policy for those that are playing within the private company ecosystem. We know that for public companies, they have spent money around their interests in Washington, D.C. through lobbyists or through having their own government affairs folks. We're now seeing that same thing happen within the Valley. And I think, if we were to take a look at a couple of administrations, both this current Biden administration as well as the Trump-Pence administration, the Biden administration has been very systematic and aggressive, filing a record, I think 50 lawsuits against, technology companies. And it's really suppressed the M&A activity. It was a little bit more selective during the Trump administration, but nonetheless, we are now looking at probably about a 10-year low in M&A activity. Why is that important? Well, it's important because it's a reflection on the leadership of these agencies, the FTC, DOJ. In my opinion, we need to remind ourselves that not only are we suppressing the available capital, because when we think about M&A activity, that's a strong way to get capital back to investors like the limited partners that invest in venture capital funds. The venture capital funds look for the next Googles, Microsoft, and Facebooks. And the inability to have that capital returned means that the LPs are not investing back enough into the venture capital firms, which kind of suppresses our ability to drive innovation. I think it's also important thinking about it from a perspective of America as a company. We need to maintain our competitive position globally. And I think a lot of the suppression that we're seeing around M&A activity, it also suppresses our competitive nature when we start to look at the ability for big tech companies to pull in a startup and then provide those products to the customer base. And then also thinking about AI and really how we're trying to, I think, in my opinion, with these current administrations or agencies, over-regulate AI. The market can figure it out. And I think looking backwards, which is the way that a lot of times we're making these types of policies, is the wrong direction to look. And unfortunately, I just don't know if we have the right talent and leadership to understand how dynamic the changes are within our industry, especially around AI. I can barely keep up, so I'm not sure how folks that have so much on their plates and have chosen to go down that career path can keep up.